Good morning and welcome to my morning report on Monday the 16th of May with me, Rich Paramark, analyst at Handtech Markets. We've got a fairly sort of negative start to the European session, nothing too significant to the downside, around about 1% off for the CAC, but FTSE is slightly better than that, just around 0.5% down. You've had weak Chinese data out overnight. You had the retail sales, industrial production and fixed asset investments all coming in underneath expectations, all missing the consensus numbers, and it sort of reflects a further continuation of this sort of slowdown in China. But it does, I suppose, raise a few questions as to whether that would mean the PBOC is going to do further easing or not, and maybe that's why we've got a slight sort of dichotomy in the markets today. We've got equity markets generally lower, but you've got a little bit of risk appetite in the commodity space, which I suppose would be still feeding into China. So it's a bit of a strange sort of split in the markets today, that is seeing sort of the gold price higher, which I suppose is a safe haven move, but also the commodity currencies as well higher. So we've also got the oil price, which is showing gains again. You've had reports out over the weekend that Goldman Sachs are talking about the continued rebalancing and of the oil market fundamentals, and whether this is sort of late to the party or not on this argument or not, I don't know, but it certainly seems as though it's having an impact on the oil price, pushed it higher today, and it continues to sort of make the breakout that it did last week, and it's sort of moving towards on WTI 48.36, which is the next November high, and then 50.90, which is the key high from October. So we're still showing those gains there, so that's helping those commodity currencies. Now, as I said, the dollar is slightly mixed, really, not really going anywhere. But interesting that we're seeing the Treasury yields. That 10-year Treasury continued to go down on Friday, even though we had retail sales that were better than expected in the States. We did have a little bit of an upside shift on Friday in the 2-year, but that sort of came back in into the close. Slight gains on the 2-year today, but still I think the 10-year is reflecting continued concerns really with the global slowdown, that's still reflective of the China move as well, I suppose. So interesting that we're seeing these moves on the markets today. So that takes me to my chart of the day, which today is the Kiwi dollar. Now, we have had, as I said, an early move higher on the Kiwi dollar, which sort of has helped to unwind a little bit of weakness. But look at this old uptrend channel that's been broken now, and I've been focusing on this double top pattern here that got that closed below 68.03 last week, but then we saw the pullback to the neckline, and then that big bear candle on Friday, which sort of confirmed the breakdown, I think, and the pullback to the neckline being intact. So I think that now gives you 68 figure up towards 68.50 is your sort of band of resistance now, about 50 pips worth of resistance now. Really good selling opportunity, I think, in that sort of area. You're looking at the momentum indicators on the daily chart, you're seeing sort of the RSI now having broken below 45. That was the consistent level. 45 was the consistent level of where the bulls started to come back in, but that broke down last week and they're still below there. Look at the MACD lines falling at a sort of a 3-month low. Stochastics as well breaking down, forming more negative configuration on the momentum. So I think these indicators are all suggesting now that selling into strength is the way to play the Kiwi, and certainly the hourly chart reflects that as well, I think, with the recent downside move. And here we see that that pullback that we got last week, which failed around the sort of 68.50 area, which is sort of 68.40, 68.50, an old sort of band of support that is now turned into new resistance. Look at all these lows around that sort of level throughout April. That's turned into the new resistance. So you'd say that rallies are a chance to sell, and the downside, I think, is going to be continuing to move. I think we're going to see that move back towards 67.13, which was last week's low, and ultimately then a test of the late March low of 66.67, but ultimately back towards 65.60 area, which was the February March lows, and the support that is key now on the Kiwi. So I wish you good luck in your trading on the Kiwi dollar today, and I will speak to you later. Thank you.